What's up, YouTube? What's going on, CCI family? It's your main man back with the game plan once again, because you already know how we do it around here. Got to keep you abreast of all situations all the time. That's how we stay ahead of the game, you feel me? So today we're going to take a look at what exactly is going on with Joby and their share dilution, okay? Not only that, we're going to jump into exactly how to protect your investments with stop losses, trailing stop losses, and so on. Just give you an example of that, because you got to protect your gains, you know that. And lastly, we're going to take a look at the blueprint portfolio just to see where we're at. All right, let's go. So the first question I guess you have to be asking yourself is, what is share dilution? Well, to put it plain and simply, and to save your time because it's more than valuable, think of it just like this. You have a whole piece of pie, cut it in 4, take a slice. You're good for a quarter of this pizza. Follow me? The company comes along, they put 2 more slices in it. Now your quarter is only worth an eighth, because now there's 8 slices. You feel me? So your slice you purchased initially is worth less. That's share dilution. Okay? But there's also a flip side of this in the market. Let's look. So with this dilution, Joby didn't just divvy up the pizza some more. They brought about 30 million more pizzas to the party and charged a little bit less for each slice than they did in the first time. That dropped the price. Okay, as you see, Joby stock sinks on dilution concerns, but structural tailwinds warrant buying the dip. What does that mean? Let's dig in a little bit more. All right, in respect for your time, if you want to read this in full, be my guest to pause this and go ahead and do so. But I'm going to paraphrase it just to get on through it for you, highlighting the good points. Joby went down 10% Wednesday after revealing plans to do a major stock offering. In that stock offering, it would raise $500 million. Okay, the way they did it is to sell 30.5 million shares of their stock for a discount, just under $17 a share. Okay, by doing this, they get that 500 million and use it towards their certification and building these planes. Okay, you jump down to the bottom and you see just that. Joby Incorporated will use the proceeds to fund its certification and manufacture efforts to better prepare for its upcoming commercial operations. Simple and plain. So what does that mean? For me, can't tell you what to do, buy, hold, or sell. It means there's a discount. I'm heavily DCAing into them with my eye on them as well, which is how we're going to go over into protecting your investments, using stop losses, trailing stop losses, and so on. Okay? We're going to actually implement that into the blueprint on our Joby stock shares. Here we go. Now, even before we get to that, you may be asking, why would I purchase more shares? Very cut and dry. This stock was almost at $21 before the dilution. So I know they're already good for that. After the dilution, we hit just below $17 a share. However, today's the day after, and they're already bouncing back up. Not only that, if you take a look here, you'll see what we call a reverse head and shoulders pattern coming up, which is very positive. But we'll get into how to look at the technicals later. But that pattern is a positive pattern, meaning we're going up. All right. Also, This stock has been over that amount before. Okay. Anyway, what this all tells me is when they get their certification, which is what they're using these proceeds for, as well as to build more of the aircrafts, the FAA certification, which is the last one that they need, is off to the races, just as with Archer. So those stocks that I have now, plus what I'm adding on to, you're talking 3, 5, 10, 20 times more. It doesn't stop. Okay? Not rocket science. Now let's protect. All right. This is a shot of our blueprint portfolio. Okay? You can clearly see this is a live image of our running blueprint. Currently sitting at $174.16. Okay? Portfolio is looking beautiful thus far. Okay, still have the $61.10 sitting in there for our buying power. Okay, but what I really want you to take a look at here is our stocks. Now we have the VOO, GE, Wolf, Joby, as well as SMCI. Okay, and out of all of these, it is our own Joby who is the down shot for the day. Okay, currently about 7%, almost 8% down, okay, on the day. However, what this tells us to do is, let's go ahead and take advantage of this price now, because it may be the only time we can, for a while. Maybe it doesn't get down this low again, okay? So we're going to go ahead and buy us 1 share of Joby today, and I'm going to show you how to do this as well. So our market value right now is $18 and change. Average price is $14.35 a share. Now that's going to raise up in just a moment, because we're going to go ahead and purchase 1 share of Joby at this price, okay? So what we're going to do is, I want you to go on over here, and you're just going to, we're going to do not a dollar buy today. We're going to do a full share buy, okay? So we're going to go ahead and click on shares and then select 1 share, okay? And simply click on buy it, okay? After that's done, we're in there. So we've purchased 1 share of Joby at $17.42. Okay, so here's a quick last look at the blueprint portfolio. The reason I'm saying last is because for now on, we're probably going to be checking back in on it every week to once every other week, just so we can let the momentum build up in our portfolio. By now, you should know enough on how to add to your positions. Remember, you do not have to follow these positions. I encourage you to do your own research and due diligence into any stock you place into your portfolio in this race to $1,000. Okay? Remember, this is for financial education only. I am not a financial advisor. Okay? I'm just a lover of the game, and I'd like to share that game with all of you. Okay? So as you see, our line is looking good. We're still growing. We have $43.68 at this very moment. And I also encourage you to always add to your buying power. Okay? Because you never know when that sale is going to drop. Okay, so let's take a quick look at how to protect, and I'll get you all out of here. All right, so again, in honor of your time, I have gone ahead and created this little screen here to show you exactly what I mean by setting your trailing stop limits and so on, and protecting your investments. These are the stocks that we have in our blueprint portfolio, or in my portfolio at this moment, which is VOO, GE, Wolf, Joby, and SMCI. Next to that, you see suggested stop percentages, which means I would set my trailing stop limits for each one, respectively, where these percentages lie: 10%, 15, 30, 30, and 20, which means if these stocks were to cut back or drop, in other words, 10%, 15, 30%, or 20%, that is where the market would cut me out and I would keep that much of my earnings. Okay? In other words, wherever I was, say if I'm, 100% up in the stock, okay? For instance, Wolf. I'm 100% up in Wolf, right? The stock drops 30%, I would keep 70% of mine, either to reinvest at a later time or to invest into another stock. Okay? And that's how that goes. In our next episode, we'll jump into a little bit of option plays, and I'll also show you exactly how to set this stop limit inside of your portfolio. That is if you're using Robinhood. Okay, because that's the platform we're using in Chump Change. All right. So there you have it once again. As usual, I want to thank you all for your time today. Thank you for joining Chump Change Investments. If you're learning something, please consider giving me a subscription and hit that like button. It'll help the algorithm and it helps us keep going. All right, so until next time, you know the saying, stay blessed and have a financially successful week ahead. I'll see you on the next one. Peace.